Good afternoon. Let's just wait for Big Al to turn up and we can kick on.
I'm hoping my background isn't too noisy.
No,
At
it's absolutely fine, buddy.
okay, that's very good.
Good morning, everyone, or afternoon, evening, whatever time of day it is, wherever you are. Welcome to today's AlphaPicks Friday Fix, where the team, Jesse and Alex at AlphaPicks, rather, give us a rundown on the major themes that have been impacting markets this week. As always, do follow both of them and also definitely subscribe to the AlphaPicks Substacks. Before we go any further, though, I will get the legals out of the way. Nothing discussed on the Spaces session constitutes trading or investment advice from infers any kind of endorsement by PiQ, AlphaPicks, myself, Ryan, Jesse, or indeed Big Al when Big Al shows his face. I don't know if you've got anything to get on with, Jesse, before he turns up.
He should be here. I was just messaging him. He's online.
Maybe some technical issues on his end.
He should be coming in.
Dun, dun, dun.
How's your week been?
It's been good, mate. It's been very good. It's
Fill
been
the
very
space.
busy. Yeah, it's been very busy.
Yeah.
This is why I kind of tend not to say anything until everyone's on, which is why you kind of threw me when you came in and just said afternoon as soon as you landed.
Sorry.
There he is. There he is. We'll cut this start bit out if I can. Right, invite to co-host. Dum dum dum. Right, what is that? So Alex is joining us, but tell you what I'll do. I'm going to start it again. So stay on the call and I can just get the guys to trim off the first bit. So good afternoon, good evening, good morning, whatever time of day it is, wherever you are. Welcome to today's AlphaPicks Friday Fix, where the great team at AlphaPicks will be giving us a rundown on the major themes of markets and what's been going on and impacting everything we're looking at on the screens. But before we do check out the AlphaPicks Substacks. Do subscribe to them. Also do follow the guys. And I'll get the legals out of the way now. Nothing discussed on the Spaces session constitute trading or investment advice, or if there's any kind of endorsement by PiQ, AlphaPicks, myself, Ryan, Jesse, or Alex. What's been happening, guys?
Well, good afternoon. Good afternoon, everyone. I suppose, to answer in a short word, a lot, actually, considering this was the first sort of full week of like summer holidays. It was definitely not like a sort of slow week, but for different reasons. I mean, I think the best place to start is on corporate earnings, where there's been a slew over the course of this week of bits and bobs, primarily focused, obviously, out from the US. And a couple I wanted to talk on, a couple actually that I wanted to focus on because they're in our portfolio,
Yeah.
is Meta. From Wednesday night after market close, and Amazon, who basically released last night after market close. Meta absolutely killing it, and interestingly, killing it and boosting their earnings per share was up like 35% versus same quarter last year, which is even more impressive when you consider the amount they're shuffling into AI in terms of capex spend. And this contrasted to Amazon and also Apple from last night, whereas Amazon's shares down like 7% pre-market, Apple's up modestly about 1%. Even though both Amazon and Apple beat expectations on the quarter, both of their concerns are actually they're not pumping enough into AI, particularly for Amazon on the cloud computing space, AWS, and for Apple, basically Tim Cook's like, do you know what, guys, we're actually going to have to just go out there and buy up companies related in order to catch up to the competition. So I think it's an interesting dynamic and interesting to get both your thoughts on it. Whereas, Q1 into sort of Q2, we were talking about, AI capex spend is overhyped. We've got DeepSeek, what's all the fuss about? And now we've done a complete 180 whereby shareholders are rewarding companies for pushing more into AI and actually sort of hampering companies that they think aren't keeping up with the situation. So I think it's an interesting dynamic, and didn't know
It's
where
an
you
odd
guys stood on that.
it's an odd one because I remember it feels like about this time last year, possibly, we were talking about how companies were basically boosting their share price by just announcing that they were going to invest X billion into AI. And then we kind of seem to have that lull where, especially when when the DeepSeek stuff happened, it was like, look, how maybe just throwing money at it, money at the problem or trying to throw it at the solution, I guess, isn't the solution. And shareholders want to see companies actually think about where they're putting money and be smarter about it. But then obviously that kind of got turned on its head, I guess. When was it Meta went on this hiring splurge? Like a month ago, 2 months ago?
Yeah, a couple of
Like,
months ago, super
like
intelligence.
yeah,
Yeah.
it's 100 million basic and like 300 million sign-on fee or whatever it was. Yes, it does feel
Mm.
like you said, it feels like we're getting into like a capex arms race again.
Mm.
Which, mine isn't to wonder why, but yeah, it's an odd one. I just don't see how this is sustainable. And it feels like the kind of technology where you will have to keep up the spend because obviously everything's
Mm.
advancing so quickly. Like we're seeing already, like Nvidia chips. Yeah, they've got there's companies now that have been on order for chips that they ordered a year ago or 2 years ago. They're now trying to take Nvidia or to kind of have redo their contracts with Nvidia to try and now benefit from faster chips that are now that have already come into the marketplace. So
Mm.
yeah, it does feel like a bit of an arms race that potentially everyone's a loser. But yeah, I'm not really too sure where I sit on this, to be honest.
Yeah, because the one I think the figure or the sort of quote that stood out to me was actually, we're talking General Mag 7, Microsoft, which was also Wednesday after market close, who their stock popped as well. The interesting thing they stated was that their planned capex spend for the upcoming quarter is going to be $30 billion. And when you extrapolate that across the remaining remaining 2 quarters, they're run rating at basically 120 billion on an annualized basis. And the reason why in the piece I was reading thought this went under the radar was because Google basically came out earlier in the year and said they're going to spend 85 billion this year on AI capex. And that was at the point where everyone was like, hang on a minute, that's a ridiculous amount of money
Yeah,
to be spending on capex. And yet quietly, all of a sudden now we're here with Microsoft, who are basically run rating at 120 billion for AI capex. And all of a sudden, Microsoft, they popped 9% in aftermarket hours on Wednesday night. So it really does sort of show how the sort of sentiment has changed. But equally, as with, I'm going to call it a bubble or a fad, but it
yeah,
equally shows the sensitivity when you're in this sort of ever evolving new sphere of how quickly investors can change their perception on where they think the trend should be going forward.
yeah. Like I said, I think there's so many moving parts at the moment to all this. I think it's James Citrini. He's been putting some really good work into this, isn't he? If I remember correctly.
Mm.
It's an interesting.
He's got his
Yeah,
baskets.
yeah.
Yeah, yeah.
Um, yeah. I'm not really sure where I stand on it, to be honest. I'm probably the wrong person to ask.
No,
Jesse,
it's fine.
anything from Jesse?
I think the last thing that Alex said there, the ever evolving sphere, I think is a good way to sum it up. Because right now, like the spending is being celebrated. There was an account on Twitter, High Yield Harry, kind of like a meme account. He
Oh
put
yeah,
out they're spending like hundreds of billions and trillions on AI, and you're bearish. Actually, your friend Jonathan Ferro had quoted it in one of his shows yesterday. So that kind of sums up the sentiment right now, is that the spending on capex is being celebrated, but in Q1 when DeepSeek came along, it was being
yeah. Penalised.
criticised. Yeah,
Yeah.
penalised. Yeah. So
It does feel very like
yeah.
trend. Like it just feels like whatever's in fashion, whichever way to kind of view the market at the moment. It's just I don't know. It just feels very messy to me. It doesn't feel like there's any rhyme or reason behind it, like which way we're going. But
Mm,
I don't know.
mm. Um, and then the last one I wanted to talk about before we move on to a host of other bits and pieces, whilst we stay on US equities, was Figma, the
Oh yeah,
IPO, just to make us all feel a lot better about our financial position on a Friday lunchtime. So obviously Figma went public yesterday, first full day of trading, popped 250%. Now is basically valued at over $65 billion. Dylan Field, co-founder of the guy, basically founded them 2012. So, I mean, we can think about what we were all doing in 2012, not crazy amount of time ago. And the dude's now basically got a net worth of $6 billion. So he's done very well out of the Figma IPO. And the other one, and this is, I don't know if you've got any jingles for Friday's stat of the week.
Oh, hang on.
Give me what have you got? Nothing. Okay.
No,
Don't
I'm,
worry,
I'm not on
we
my
can
mobile. I'm
imagine.
using my laptop. And I don't know how to do it.
Bingo.
I don't know how to do it.
So I don't know how to phrase this in a question, so I won't phrase the question. But the Figma IPO was the largest first day pop in over 3 decades for a US company raising over $1 billion.
Eesh. Well, I did look when I looked at the chart. I thought, like, however they price this up, yeah, it's bonkers when you think about it, because it's not like it's not a tiny stock, right? It's a large stock, where it's even larger now. But to get the IPO price so wrong, like how could that even happen?
It's true. I mean, it kind of goes back to that whole murky thing of like, with IPOs, there's always that slight underpricing because you want to have that feel good factor of it rallying on the first few days. But I mean, to this extent, I agree, is like something's gone quite badly wrong. But then again,
Yeah,
like you're trying to value, this like, creative AI, driven, it's like, it's not like it's a traditional industrial, fixed asset based company where you can
yeah,
value their balance sheet quite easily.
yeah. This is very
I don't know
much
why
finger
I'm
in the
trying to
air, isn't it?
protect the Morgan Stanley bankers. I've got no friends
Yeah, I was
over there.
gonna
So,
say,
I mean,
who do you know at MS?
yeah. Yeah, I don't know why I'm trying to stick up for him.
I'll tell you, just one point on the Figma story. I think because it was a couple of years ago that Adobe tried to buy them, didn't they, for 20 billion. So I think Adobe's got to be feeling the pain,
Yeah, definitely.
seeing the stock rally up to 60 billion.
Yeah, for sure. Well, because even the Adobe, the one I saw this morning, actually, here we go. This one's a great little one. Adobe market cap versus Figma. I've got it
Oh,
right
go
here.
on, go on.
So can anyone give me put it this way. Basically, Adobe has a market cap of just over $151 billion.
Yeah,
And Figma basically closed yesterday with 68 billion. So in theory, if Figma does, which it won't, but let's say it replicates the percentage increase again today, then it will be larger than the market cap of Adobe
which
by
it
end of
won't.
play.
Touch wood, fingers crossed. But the thing, am I right in thinking? I know our guys use both. So obviously we use Adobe for kind of the design work and all that, so as in marketing assets and all stuff like that, and we use Figma for basically for doing the wireframes and what the product's going to look like, and then that gets sent over to developers, and it's very easy for the developers to use. I'm thinking that's how other people use Figma as well. But to be fair, it's a very good tool, and it's a tool that we use ourselves. So I'm not going to sit here going, I don't understand what's going on here. It's completely bollocks, because the feedback I'm getting from the guys that work for PiQ is, they seem to rave about Figma.
Well,
Really? I mean, I've never used it actually. Jay, have you?
no, I haven't used it, but I'm glad you said that, Ryan, because I was going to make a point that within these industries, there's always disruptors that come along, and they
Yeah.
often will create very good investment opportunities. And like you're saying, Figma seems to be a very sound platform, and
I'm
that's
not
how we use
saying
Adobe.
I have no idea what it should be valued at. All I'm saying is the feedback that I get from my guys is they do like using it, the design, because it's a really good way for the designers to kind of relay the tools over to the devs, and it's kind of everyone seems to be on the same page, which apparently is quite refreshing. But I'll leave that to the smarter people in the company.
Well, I mean, in theory, Ryan, you could hedge yourself basically by shorting Figma stock, right? And then like if your developers are like, oh, actually no, it's terrible, they're doing really badly, then the stock will fall and you'll gain on that, even though you'll then need to find a new provider for your business.
Yeah,
Or
and
if actually it keeps doing well and your developers love it, PIQ, off to the moon,
Ryan goes
and then you'll
bankrupt.
lose on your hedge.
Yeah,
Well, it's about risk management.
yeah, and or maybe just my developers are shit, which they're not. They're not. If anyone's listening, they're not. They're very, very good. But yeah, we'll put this one in the maybe cupboard.
Yeah, fine. Yeah, I'm just thinking, ideas, that's all. Moving swiftly on. the Fed meeting on Wednesday, which was like previously, if we were around a month ago, it was slightly more hyped up, because obviously there's a break for August. So essentially September is middle September is the next time the Fed meet. So the sort of July one is always kind of a little bit of a, slight line in the sand. But actually pretty dull, I would say. Essentially Powell saying that, cutting too soon risks reigniting inflation. Uh,
Oh, we lost Al.
I don't know if you saw it overnight from our friend Mr. Trump again. He called Jerome a stubborn
Yeah,
moron. Did you see that? Which
yeah, that's
it's quite strong. I'm not gonna lie. Like if someone calls you a stubborn moron, yeah, and the best bit about it, and before I let you come in, he said if he continues to refuse, talking about rates cutting, the board should assume control and do what everyone knows has to be done. So
On that last point about the board, that's stupid because 10 members of the board voted to hold rates. So he could get rid of Powell. The board is still gonna hold. Yeah,
well,
his comments are very interesting.
yeah. I've got hats off to Powell, because if that was me, I'd have already told Trump to poke it and fucked off. But yeah, I think Powell's basically the only reason Powell's staying at the moment is because he obviously has a care what's going on with financial markets and the economy. Because if he didn't, there's no way he'd be still there. Because he could be doing a speaking gig, getting paid £1 million, £1 million an hour for fucking speaking at BlackRock or something like that. I'm hat off to Powell, because he has had a very stressful tenure. He's had to deal with COVID, etc. and that. But yeah, it's fair play to him, I think.
yeah, and I think in fairness, the market is definitely, I'm not going to say siding with Powell, but in terms of the stance that market participants think should be taken towards monetary policy, it's definitely skewed towards this element of actually, not needing to ease as quickly as some people expected. And I mean, I know we sat here probably a month ago when it was a toss up between sort of 2 and 3 cuts, and we were like, actually, we think the bias is for this to fall down to, a single cut through to year end. And, when we look at this, like September, probably still going to be too early, and they're not going to have enough data on either, the tariff feed through impact, or again, the potential for a slight trend higher between now and then. So you think, okay, well, September's probably too early. And then obviously you've got, October and December, and you can make a good argument for them saying, okay, they'll cut in either October or December. And then, that's them basically done for the year.
It did make me laugh. Trump, when we had the GDP number out, Trump, shouting about how great the number is, how great the economy is, but then saying must cut rates now, or it was already too late. It's like, I'm not really sure he understands what goes on here.
Yeah, it's like Erdogan in Turkey, isn't it? It was basically like, let's jack up interest rates. No, sorry, what was he saying? He was basically just getting his like economics 101 completely the wrong way around.
Yeah.
He was basically like, let's cut interest rates aggressively to get inflation down.
Yeah.
That was it. And it's like,
yeah, it's one of those like no one wants to tell him.
Yeah, he's like, who's going to tell him? Who wants to get, disappear in a body bag the next morning?
This is it. He wants to leave out the top floor window.
Yeah. So essentially that was it with our friend Mr. Powell and Trump going on. And then the last one I want to talk about was essentially the freshest news sort of overnight of Trump going on this slightly curveball tariff route again. Obviously, I know you spoke about it this morning as well, but it's going after Canada a little bit again with those 35% tariffs on certain goods. Also, the one say earlier this week on the copper shift, in actually excluding copper as the raw materials, but going after the wires and the cables, which really threw the copper market. And on Switzerland as well.
Yeah, they've had
the Swiss who basically stay out of everything.
Yeah, you got to feel sorry for the Swiss. Like they've kept their nose clean. They've stayed out of trouble, and then they've woken up. Bang! How do you like that?
And they've gone from. Yeah, by the way, it's interesting, and I actually posted a little tweet on it this morning. Is when you look at dollar Swiss, dollar Swiss actually, the franc at least hasn't materially weakened over the past 24 hours. Like, it has kicked up a little bit, but when you look at it in relation to the move we've seen, even year to date, for example, like at the start of this year, we were trading above 90 cents. And then, the move we've had over the past day or so has basically been like a cent. So, we're basically down 12 cents and we've popped up one, which I think really shows, yes, you even taking out the dollar leg side of it,
Or
that go on.
or what else could be happening in that market?
What? I
How
mean,
well,
trying to
the
lead
S&B, the
it.
S&B are not known to be sitting on the sidelines for that long when things go against them, right?
That is true as well. That is true as well. But then the
Yeah,
argument you'd
go on, sorry.
say that if Trump is basically laid down and come after the Swiss in terms of the trade deal, is he going to be happy with them manipulating in the markets if that's what they're doing right now, to
They're not
backtrack
manipulating. They're not manipulating. They're making quote adjustments unquote.
adjustments?
But
Yeah.
the fact is, we do know the S&P do this we do know when things get a bit volatile. We do know the S&P steps in. So I'm not saying they have
Mm,
done here, but the fact that this move this move doesn't feel like anywhere near as much as it should have been, makes me think
mm,
that potentially people have come in to absorb some of this blow. But I might be wrong. Probably
mm.
am. But no, it just feels
No,
a
I
bit
agree. And
to me.
also I think, if you're like a global investor and you're concerned about any multitude of risks around the world at the moment, would you still be wanting to be a net buyer of Swissy as a hedge on your book, or would you be like, oh no, Swiss got a rough deal? Do you know what, I'm gonna
Yeah,
short the franc? Like, I know personally, I'd still, in terms of priorities, I'd be holding Swiss as a global macro hedge. And so, yeah, I don't see the Swissy materially depreciating off the back of them sort of coming under fire versus how some of the other countries' currencies have massively depreciated when Trump's gone after them,
yeah,
Mexico, Argentina, etc.
yeah. No, I feel you.
Mm. Well, we have whizzed through quite a lot there, actually. But I think we've
Yeah,
come
you know
through.
what? I'll take the blame for that because normally I do a lot more waffling. But yeah, I'm kind of this week's been a bit of a weird one. I feel like mentally I'm already in kind of getting summer markets vibes. Also, I need a holiday.
Yeah, Vegas didn't count.
No, well,
Um,
I'm going back in. I've just been told today, October the 7th, I'm going back. So whoopee. We'll see how that goes. Jesse, any more from
yeah.
you?
No, I think most of the main events we covered. Nice and prompt.
Mm.
Awesome. Nice and prompt. Well, time to get down the pub then, boys. Guys, thank you so much. As always, listeners, as I've said at the start of the show, please do follow AlphaPicks, do follow Jesse. Do subscribe to their Substacks. The content they put out, even the free stuff. The free stuff they put out is phenomenal quality, and also their paid service as well is phenomenal. Do you offer free trials on your paid stuff?
We do. 7
Oh, there you
days.
go. There you go. So check out the free trials as well. There you go.
There we
Right,
go.
guys. Perfect. Well, look, I wish you a phenomenal weekend. Take care of yourselves and, yeah, much love.
Have a good one.